Today is going to be a very good show. We got a lot to talk about, a lot to cover. If you're new here, welcome to the channel. All right, my name's Michael Silva. This is the Daily Stock Market Brief. I do these 5 days a week, Monday through Friday. We use technical analysis to get a good idea as to where the market is heading next. We also mix it in. We add another dimension called intermarket analysis. That's where we use different asset classes, not just stocks like the big indices, but we look at commodities, we look at bonds, we look at currency, the dollar, and then we kind of figure out where things might be headed based off the analysis. The week just came to an end, so we have, like I said, a lot to talk about. And there's a case to be made for potential stock market correction, collapse, crash, whatever. But there's also a huge case being built for another Santa Claus rally into year end. And I'm going to show you the proof. Let's get into it. Welcome back. Let's just go ahead and dive right into it. I want to share a tweet that came out from Hedgeopia. He's showing that hedge funds raised their net short positions in the VIX futures to a 43-week high. That could signal that the Santa Claus rally is still intact. And we're going to be charting this out using technical analysis in the indicator section here very shortly. But I just wanted to point that out there, what's currently taking place. Now, sometimes when we get these huge short positions, we see, more of a downdraft, but could typically end in a squeeze. So we'll talk about that too. Now let's look at a seasonality chart. This is election year seasonality. We're right here. Okay, look at December. Notice election year is the blue, pink's the average year. Boom, rally, Santa Claus rally into the end of the year. Hey, just so you know, in November, we called this out too as well. The beginning of November, we see this big ramp up. Well, we saw that here as well in the beginning of November, a huge, just massive move to the upside. However, what happens post-election year? Oh, what do you know? Post-election year. Check this out. We see this little downdraft, and then look at February. February peaks up just a little bit, and then boom to the downside. Santa Claus rally potentially happen. Crash, collapse, whatever, correction could also potentially happen. Now, I want to point out something that I noticed. Okay, we're looking at 3 months right here. These are the sectors in the S&P 500. Okay, we're looking at energy, financials, technology, et cetera, et cetera. Okay, this is a 3 months. In the last 3 months, we're looking at performance. Notice energy at the top. Now, energy has been getting beaten down, and that happens. Okay, but what happens typically when basically the leadership of energy takes over the other sectors, is what I'm trying to say. Well, typically what happens is that's nearing an end of an economic expansion. Now, we just started moving up, all right? But it's something to take note of. Now, what else can we take note of? Watch for a continued spike in WTIC, or crude oil. Okay, a spike in oil are sometimes accompanied by stock market drops. And you could see that in 87, 90, 94, and 2000. So I'm just pointing this out now. It could be very early, but it's still worth noting. And typically also when you see market, not expansions, but when you see the market fall apart, typically what you see running hot is consumer staples, consumer discretionary. You can see utilities doing well. And if you look back and pass into history while we're on the market decline, you can see that those were some of the top performers. And now all of a sudden we're seeing energy take the lead here. Is that trend going to continue? It might. Now it's time to hop into the indices. We're going to be looking at the S&P 500. We're going to be looking at multiple time frames. Okay, going weekly, daily, etc. Start with the weekly first, and I'm going to move through these ones quite quickly. You're going to notice a new indicator down here that I haven't really been showing. It's a volume-based indicator. This is the MFI, the Money Flow Index. What do I want to show you here? Well, I just want to show you that we're continually making these new highs. We broke above the broadening broke above the, oh my gosh. I got to slow down when I talk. We broke above the broadening wedge pattern. I should just say megaphone pattern. And now it should act as some sort of level of support. And we're right there tagging this trend line here as well. Okay, we're doing so on a negative divergence there. And to match it up, not only the RSI, the MFI is also confirming a negative divergence as well. So we're getting higher highs, but yet we're seeing it on weaker readings on the MFI and also the RSI. Okay, something to take note of. Doesn't mean that we can't continue this overextension or continued move. Okay, we can get higher oversold readings. Daily time frame. What took place today? Well, we had quad witch today. Some crazy volatility. I mean, we saw just overall an interesting day in the markets. This right here is a hanging man candle on a move up. All right, so that is a bearish sign, but it was once a very, very bearish candle, okay, below the 5 EMA, and then we bid ourselves back up to right around this level of support. It's kind of right below it, so it could be a level of resistance if you want to be more technical, but we're above the 5 EMA, and every time that we get below the 5 EMA, we typically get bid right back up. RSI is not giving us much data. Right now, as I see it, yes, that's a reversal type candle, but we have a lot of different things taking place in the markets come Monday. The Tesla inclusion is going to increase the volatility in the market. So it's going to be interesting to see how this all plays out. I'm not going to try to predict anything. I'm just calling it how I see it. Right, here's a 30-minute time frame. Up channel. We were still marking this pink box up here to see if it would tag in that range. That's 37.50 up there. If it does, I'd expect to see some resistance. I did a punch zoom nail just so you can see just how crazy the last 30 minutes of trading was. Obviously, just big rip down to the downside. And then within the last 30 minutes, you can see it go from basically a low of 36.85 or 86 or whatever to a high point on that candle of 37.16. So just insane move in the last 30 minutes. Hey, what's up? I want to remind everybody to smash that thumbs up. It's greatly appreciated. Thank you. Dow Jones. Jones, baby. Let's look at the weekly time frame. Look, this trend line has been so well respected as of lately. Support, broke through, back tested, rejected. And now we're seeing it rejected. It's constantly getting rejected. Are we going to break above this and just see a massive blast from this point? Hey, very possible. Price action still above the 5 EMA. The weekly candle ended up as a doji. That's indecision. Came up, ping pong there. Look where it tapped perfectly. The 5 EMA has been acting as perfect support. If we start breaking through these levels, if we break through this wedge, oh my gosh, that can be pretty nasty. If we break through the wedge, I would say we would probably tag the lower Bollinger Band. Very, very possible type of move right there. But as I see it right now, we're still drifting higher. And if we punch in daily time frame, look how tightly coiled this is. We've been pointing this out probably since back here, maybe even further, probably further. But we've just been ping-ponging around, chop. You know, it's just crazy stuff today. Crazy stuff. A low of 30,029. We closed at 31.79, right on the 5 EMA right there. So bulls are still technically in control. Look at, we tagged this lower trend line right here, moved right up from that point. That lower trend line is also right by the 20-period moving average. If we get below the 20-period moving average and this lower trend line, that can spell a little bit of trouble, I would imagine. If we do break down from this, look at the lower Bollinger Band right here. I'd see we'd probably get some support right in that zone right there, 29,400, just above that. That would make sense to me. Transports. Transports is very important to the industrials. This is called Dow theory. So we look at how the transports look, and we look how the industrials look. We look at all kinds of things, right? But what I want to show here on the monthly time frame is just look at the candle that's currently forming. The month's not over. If we have a Santa Claus rally, this can look strong, right? There's no reason it couldn't. One thing I want to point out is just the disconnect from the 5 EMA, the most frequently tagged EMA. You can see through the history. Once it gets overextended, you typically see it tag back pretty quickly. Right here, we got overextended with one of these type of candles. Just went sideways and then went higher. So that can happen too. All right. But this is also a reversal type candle. So if we get confirmation and it closes lower, if it comes lower than this low, with the low is 12,330. So next month, okay? If we get below that low, I would say that we can easily come and tag this 5 EMA and we'd probably find some support right there. So look at the Russell 2000, the crazy small caps that just want to keep running. First off, let's look at the weekly time frame. I zoomed out quite a bit. I want to show you the money flow index, which I've been kind of bringing up here. First off, it's overbought. Sometimes when you get overbought readings, you get pullbacks. And it very rarely happens on the weekly time frame. Look, we're in 2020 right now. Okay? Last time it happened, 2019, April, we had a 9% drop. The RSI wasn't even overbought at that time. Interesting. MFI right here in 2013, 5% drop. And then we had this extended reading for quite some time in 2011, and eventually it rolled over pretty darn hard. There were some other things going on at the time. So what do we got going on more close to the price action? Well, let's zoom in. As you can see right here, we've been in this up channel. Now take note where we are. We're extended above the upper Bollinger Band, disconnected from the 5 EMA. We're overbought here, and we're overbought here. Overbought can stay overbought, like I said, for a long time. But when you have these type of readings, it's not the best time to go long, unfortunately. The best time to go long was when we saw the breakout right here at around 165. And then way back within this time frame, when everything was hitting new highs, small caps weren't. And that's when we started to say, I gotta pull up that video to hear so people can hear me say that. But I said small caps looked like the biggest opportunity because everything else was already reaching the previous all-time highs. So interesting stuff going on. Now, daily time frame, rising wedge, disconnected from the 200 period moving average by about 34%. RSI overbought, tightly wound pattern. This is like stunning. Rising wedge. Okay, I posted on Twitter about that today. Actually, on the 2-hour chart, I posted about it. Okay, first off, we had a pretty nasty down day in the last 2 hours, and in most of the indices in the last 30 minutes, hour, 2 hours, 30 minutes, we actually saw quite a big bid. The Russell 2000 didn't really get that. All right, so we have a negative divergence. This kind of broke, so we'll see if we get some continuation here. But this is just like one of these things that if it does break down and we just see a complete collapse, retracement wherever it wants to bounce from, 177, 175, previous areas of resistance, maybe it'll find support. But we'll look back at this and be like, it was so obvious, right? Or maybe we'll just continue to rip higher. But this is just like the perfect rising wedge right here. So it's just pretty insane. Let's look at the NASDAQ 100 now. NASDAQ 100 has been relentlessly strong. New high, close for the week, right? All-time high for the weekly close. Symmetrical triangle when we broke out, we call that out. We've been tagging the 5 EMA here, boom, 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 still holding that. Right above the upper Bollinger Band, we have a negative divergence on the RSI. And I want to point out the MFI here too as well. Now, the reading is not overbought, but we have a high here and then a lower high here, while we have a high here and a higher high here. That's a negative divergence. But it's not a negative divergence with overextended readings. So let's not put too much weight. Now, if you draw from here to there, that would count as a negative divergence. And then you can see the last time we had a little negative divergence right here. Boom, we fell to the downside. Negative divergence right here. Boom, to the downside. This one's interesting, okay, on the daily time frame, looking at the MFI and then also the price action here. First off, notice the symmetrical triangle right here. And yes, you can draw support, resistance, and trends on these indicators. Don't kid yourself. You can do it, okay? Now, look at the price action. First off, when we hit this all-time high right here, we were overbought. And then we pulled all the way back down, touched pretty almost into us oversold territory. We didn't quite reach it. And then you notice the price action come up, boom, trend, came back down, trend. Now, what I find interesting is we came back up, up here. We all these gaps to push us up higher, false breakout. Then we tracked sideways. You can see that here. But then we started breaking out. Notice the money flow is not following suit. So we're starting to press higher and higher here. And by the way, that's a hanging man candle. But the money flow is not showing it. So we're drifting down. Now we're still above 50. But if we start breaking below this trend right here and start making a lower low in the MFI, this can fall apart. We can go retrace this lower Bollinger Band and this kind of symmetrical triangle. That would probably act as a level of support. We'd also have to break through about 12,200 and the 20 period. So there's a lot of support up in this area. But keep that in mind. Okay, price action's continuing to drift higher. Money's drifting out. This is pretty important to note. All right, let's go to some indicators. I got a lot of indicators to go over, so I'm going to move through them pretty quickly. Yeah. First off, we've been talking about this falling wedge. We broke out to the upside. What's this right here? It's a new wedge that I'm drawing out. Why am I doing that? Well, because, like I said, the case for the Santa Claus rally. And then look where this kind of goes down into 2021. Remember the seasonality chart where February you see that downdraft, potentially even January. So I thought it was worth noting. This right here is that shooting star candle that was mentioned in his tweet. We saw this as a big green candle right here at the upper Bollinger Band. As soon as I saw it up in that level, that's when I was kind of saying, oh, okay, that looks like an area of resistance. 25, and then we lost a couple of points just really quickly on the way down. If this continues, it's probably going to go to down this range around 19. That would make sense. That's a lower Bollinger Band. It's right here, the previous support where it bounced from, where the gap is, the top of the gap now. If we continue to drift lower, though, an aggressive move lower, that would fill this gap, which would be, something that we haven't seen take place since February when it occurred. And then, if it bounces from that point, look at this falling wedge. That is pretty bullish. And then what if we break out of that? Well, hold on tight, because volatility can get pretty crazy, man. All right, Pring Bottom Fisher. This is also another case for the Santa Claus rally potential. Now, this is good for finding market bottoms, but it really is only good for finding market bottoms when the signal line crosses above the moving period average, the 10-period moving average, when it's below this number 10, or even better, below 25 over here. So that's when the blue line crosses above the green, it gets signal, a bottom. However, what I want to point out here is what's currently taking place. We're seeing it kind of curl up right now. Hasn't crossed above the 10-period moving average, but it kind of looks like it will, right? One could argue that it looks like it's about to cross over. So I was thinking, okay, so if it's above 10, let's look at the previous times that it crossed back above and just see what happened. Well, look right here. We'll go back, okay? I've tried it 4 times. The last 4 times have been pretty consistent. Blue line crosses above the green. What happened right here? Squeeze, boom, to the upside. It's a pretty aggressive squeeze to the upside. Right here, crossed above it. What happened? Very aggressive squeeze to the upside. Mind you, both of these times, we came full circle and corrected even lower. Right here, squeeze to the upside, corrected lower, squeeze to the upside, corrected lower. Right here, we crossed over. Zoop. Not quite a squeeze, but that's a pretty relentless move. And then right here, we crossed over, we bounced around, and then we moved a little bit higher. Right here, boom. Okay? So pretty strong moves in the S&P 500 when this crosses back above. Will that happen again? Well, it's happened the last 4 times. Maybe we just get this relentless melt up even stronger. Maybe not, but it's worth pointing out. All right. Now I want to talk really quick about the BPNDX. This is the percent of stocks that are on buy signals in the NASDAQ 100, so 77% are. Look at negative divergence on the RSI, but if we start breaking above that, we still have room to be moving as far as overbought readings go. Yeah, it's a negative divergence, but that doesn't mean it can't continue to go higher. So we got to watch out for that. Same thing with the BPSPX. So 74% of stocks based off point and figure charts are on buy signals for the S&P 500. It's been drifting lower while the stock market S&P 500 has been drifting higher. That's a negative divergence. But if we start upticking, we have a lot of room to go to become potentially overbought. All right? So it can be looked at both ways here. It can be looked at as a negative divergence, which it is, or the possibility for it to run higher. Next one I want to talk about is the sell signal, or the warning. I forget what I call it. Forget what I say. Double bottom right here on the smooth period, 10 period moving average, smooth over 10 trading days. This is the put to call ratio. It's a good sentiment indicator. When it crosses above the red line, that's the quote unquote sell signal. We marked it out right here when it hit this little double bottom. Notice the difference here. When it hit this point and it started moving up, it was a little bit more aggressive, and we saw this sharp decline. When it crossed above the red, you can see right here, we started to head lower. Same thing right here, crossed above the red, you started seeing head lower. Right now, we still have a little room to go. So first off, that means that we could, bounce around lower still. That's still a possibility, but if we cross above, then I'd be pumping the brakes a little bit. Now we're looking at the lumber to gold ratio. If you have not watched the interview yet, or if you already have, you should watch it again with Michael Gaia. That is on my channel. I talk about the lumber to gold ratio with him. He explains it for us. This is the 3-week rate of change. When we cross below 0, that is a risk-off environment. But he uses the 13-week. He said the 3-week can work good. You just trade more frequently, going risk on to risk off. Notice where we're at. We're at 10. We're still not below 0, so it's still a risk-on environment. Then you look at the 13-week, clear above it, right? Above 40. Now, it's interesting because we have a little bit of a negative divergence here, so might be able to take note of that. And same with the lumber to gold ratio itself on the RSI reading. Negative divergence. Don't hold too much weight. You can just look at the rate of change and say when it crosses below 0, that goes risk off. That's what he does. Night high low. Jammed still, holding strong. 98.3 reading. Sometimes when we get corrections, though, they can be pretty aggressive to the downside. NIMO. Yeah, we're drifting higher on the S&P 500, but look at the breadth. Negative, right? Just not the greatest. Even the last couple of trading days, just horrible breadth as the market is kind of just drifting up. Then we look at sentiment. Notice the bulls here for sentiments down just slightly. Negative divergence. That happened in 2018. Then you look at the ratio, negative divergence, negative divergence. We saw that pullback. So yeah, this can go on for a while, but take note that it's a negative divergence. And then you have the NIM. What are asset managers thinking here? Well, are they bullish? Are they bearish? Then we have the right X below it. We had a little bit of an uptick in the right X, but still very, very low readings, means a lot of money is bullish. Asset managers, pretty much max bullish right here too as well, even though we're seeing a little bit of a downtick. fast stochastics on the NYSE. Pretty much max overbought. This can hold for quite some time, but notice the signal line kind of crossed down just slightly. If we start seeing this move down, buckle up because things could get pretty rough to the downside, but it can also hold up there for weeks, months, for a while. The null, NASDAQ, new high, low, new high, new low. Oh my gosh, I always mix that up. It was a negative divergence. Boom. Even higher highs than previously. So this thing is just jammed up to the max right here. It's really high up there. Look for a correction, potentially. We can potentially build out a negative divergence like this where we saw a little pullback, then a weaker reading here on a higher high, and then we saw that pullback. But as I see it right now, still holding strong. Last one is the percent of stocks above the 200 period moving average in the NASDAQ 100. 90%, 89%. That's a very high reading, could stay there for a while. But notice the last times it's been there, we've seen some corrections take place that have been pretty sharp, pretty aggressive. All right, let's go into commodities now. That was all the indicators. Like I said, we'll wrap this up in the conclusion section. First off, CRB, so the basket of commodities. Just look at this spike, just moving and grooving. RSI reading, we just broke BAS. It was a negative divergence, didn't care, continue that move. So this is bullish, this is strong. This means the dollar is getting weaker. All right, so we got to keep an eye on this as commodities get more expensive. Okay, remember what I talked about? Oil. Watch the spike. Look at oil coming in. Pretty strong. RSI is pretty darn overbought. Pretty frothy. And we're running into a level of resistance right around 50. We didn't quite hit it today. 49.24 is where we closed. Okay, we had a high of 49.43. So if we start breaking through these levels, maybe we might start seeing some very sharp movements to the upside in oil. And like I said already about oil, this is important. Rising oil prices, they've contributed to every U.S. recession in the last 40 years. So we got to watch out for sharp spikes in oil, as stated already in that tweet. All right, let's look quick at gold. Gold didn't do anything. We're still below this trend line. Can it roll over? Can it continue higher? Yeah, it can go both ways. The only good thing going on right now is we're still above the 50 and still above this trend line. We'll wait till further notice. Silver, this was the resistance we mapped out. Look, got hung up right there. Spot on. Wait till it breaks out or a back test. We're above the 50 and we're above this trend line. So it's a good looking setup so far. If you look at it this way, left shoulder, head, right shoulder, this could be the neckline. If we break above that, $30 target, piece of cake. Let's do it. Bitcoin, the breakout's just been just an insane breakout. Now we're seeing some, I would say this is just consolidation right here. Yeah, a little bit of a hanging man, a little bit of an upper wick, but that's normal. I mean, this was such an aggressive move. Maybe we go sideways for a little bit, or maybe we can pull back a little bit, flag out, and then break out to another new high. We got to just see how this plays out. But lately, this has been doing really well, and the commodities have been doing good on the back of a weak dollar. And that's what we're going to talk about now, the dollar, because the dollar is important. First off, I redrew out the falling wedge to make it look like it's still in a falling wedge. Why'd I do that? Well, one, just because. I still kind of have conviction that we might be able to see a squeeze here shortly. And we'll get into bonds and talk about that actually. So how did the dollar do today? Well, all right, it was up 0.21. That's 0.24%. It didn't head lower. It was an inside trading day. RSI readings overbought. It's kind of a double bottom here. It's not quite a bullish divergence anymore. But I mean, one could argue that it is because it's not getting a lower reading and it's making a lower low. So I can see the case for both. Other than that though, you have a bullish pattern, somewhat of a bullish divergence, but then you have all the SMAs pointing downwards. And that's showing us the trend is poor. And you got the MACD sloping down below zero. It's just a bad trend overall. When you look at the weekly time frame, falling wedge, falling wedge. This is where it's getting interesting because you had the bullish divergence there and the bullish divergence there on the MACD, and you're pulling into an area of support. Has a lot of work to do to still break, but man, if the dollar starts spiking, then you're going to probably see commodity prices take a little bit of a nosedive because a rising dollar causes commodity prices to fall. Falling commodity prices usually produce higher bond prices. Let's talk about bonds. What's bonds been doing? Lower highs, lower lows, been trending downward. Not doing that great, okay? Down day to day, and this makes sense. I mean, sometimes when you see bonds go lower, you see stocks go up. They kind of work inverse. All right, so what else are we hearing about the bonds? Well, we're hearing that there's record short positions. Well, when that momentum dies out, what typically happens? Well, we can get squeezed. What happens if we get squeezed and bonds continue to go higher? Well, yields are going to fall. And if bonds go higher, like I already said, what's going to happen to the dollar? Dollar can go higher. And if the dollar goes higher, what's going to happen to equities? Equities can feel a lot of pressure. Commodities can feel a lot of pressure. So it's going to be all interesting to see how how this works out. Now, when I look at yields, we have higher lows being built up. That has not been broken yet. Same here, higher lows breaking up. This is the 30-year. This is the 10-year. This is the 10 minus 2 spread. Spread is just kind of increasing there. And then you have the 30 minus 5 spread as well. That's also widely tracked. Higher lows, continue to move. But you can see it's getting compressed right around 1. It's struggling to get above that level. So if we do see a spike in yields, that could be, we'll play it when we see it, but that could not be the greatest sign either. But either a sharp decline could also be not a great sign either. So we'll see how this kind of all plays out. All right, conclusion time. Santa Claus rally. Can it happen? Yes, it can happen. We looked at seasonality charts. We looked at VIX. Okay, we looked at the VIX futures short position. We looked at levels of the VIX, where it can potentially pull back to. This helps us prepare ourselves for potentially looking at individual stocks if the VIX hits a certain level. We also looked at the indices. Look at the Russell 2000, very overextended any way you look at it. So that's one that I'm not looking to buy into. But the NASDAQ, on the other hand, has been showing some strong strength. And if we do get pullbacks there, those would be buying opportunities because you can hedge long. So as I see it right now, the market as a whole is pretty overextended. But that doesn't mean we can't have an end-of-year rally. Notice the seasonality chart post-election, where January is kind of flat, then you have a ramp up, and then a big hit in February. So I wanted to point all that out today. As I stand personally with my money, I've just been super patient. I've been catching some upside moves. That's awesome. But I've also been protecting myself with some short positions as well. And as I stand currently, I'm mostly just in cash because I just feel safe right now. And then also commodities. I have quite a bit of commodities, so I've been enjoying this run up. I'll see you back here next week.